Hi and welcome to the market alert for Thursday, the 22nd of July 2020. So markets are bouncing off the walls. Well, they have been for some time. There is a sense it's all gone a bit too far in current markets. Well, I would certainly agree with that, given the market struggling to make new all-time highs, as we've seen over the last few days where the volatility has increased. But speaking of volatility, having recovered the market from the shakeout of the last couple of days, the implied volatility continues to move down from the 1473 down to the 1316. So continuing to move down as the market moved up yesterday. So again, they've managed to remove the risk out of the market. Meanwhile, news for today, we've got MPC Broadbent. He's speaking at 9:30. Then over to Europe at 12:45 till 1:30 p.m. Lagarde's out today. They're wheeling the criminal out at 1:30, and unemployment claims for the US. So fairly quietish, but tomorrow I think it picks up a bit, if I recall from Monday's alert. There you go. Got all the flash news out tomorrow, which is a pain, as you'll know, because we go from one news item to the next in small intervals. But we'll look at that tomorrow. Okay, let's have a look at the Dow. We'll start off with this. Again, yesterday you can see the market moving to the upside. We see buying volume coming into the market as well. Price is trading up to the 78% there. The buying volume actually is for the previous day. I've just noticed I've got the wrong bar there. That was on Tuesday. Wednesday, the market continuing to move higher there, which is that bar there, which is still above average volume. Above the 78%, we've got the 89, and then, believe it or not, we're back to the all-time high. And even this correction was far less in magnitude than the previous one as well. So they're doing their best to keep the markets moving to the upside, which is plain to see there. Yesterday in the morning, the pajama traders moving the market to the upside. The market came back to the close of the previous day, and now you can see we've got some demand coming into the market. The price or the volume in this bar is greater than the previous bar, and then price is moving up for the afternoon, and it was a big move up again. Also in the DAX as well, as we can see here, the market trading back through all of these fibs that we had drawn in, currently just above 89. So we need to remove these now and move up to the recent high down to the recent low, and we'll see the fibs that we've got here to gauge. And yesterday I used the 50% one. You'll see that in the second part of the market alert. So we can get rid of 38. We don't need the 50. We're through there. So these are the upside targets. Again, the DAX, as you can see, is fairly weakish compared to the Dow. And yesterday morning was a prime example. The market just wouldn't go when the Dow was moving up vigorously by the overnight traders in the US, and the DAX took a moment or two to go. It had a pullback, and then it followed. It was slightly delayed, which is seems to be a bit of a theme at the moment for the DAX. So the 30-minute DAX gives us a bigger picture of where the market is. Yesterday you can see the market moving up, pulling back to the close, and then the US market moving sharply to the upside again in the afternoon, with the DAX following. Fairly quiet overnight, sitting at the previous day's high, as you can see there. Long way off the DP, and certainly the previous day's low. So again, that's reflected in the daily chart with the rising lows that we're now seeing as we head back up towards these levels here. So beyond the high, you've got your R2, R1 and the R3 above there, and then in the daily chart as well, of course, the importance of these. So we're already above the previous day's high. You've got to use your fibs and your pivots on the upside as the market moves to the upside. That's if it does, of course. I mean, it could have a reversal and move to the downside, in which case you've got your DP and all of your other pivots and targets there. And in the daily chart, that wouldn't be too difficult to actually draw in. Just draw in from this low to yesterday's high, and they would be the downside targets for the German DAX there. So let me just save all of this and let's have a look at the metals, which had an interesting day. They were allowed to actually move up yesterday, which is quite something. You can see there silver being moved up, but immediately on the overnight now we're seeing this being moved to the downside there. So probably back to the 78%. Still looking at the 89 on the downside. I don't think they finished yet with this. In the dollar, down day for the dollar yesterday. Stuck at the 89% retracement. Let's just, out of curiosity, just in case we get a continuation of the down move, this is the last low that's left behind. So I'm just going to use this up to here just to see where the main area of support would be if the dollar does move to the downside. But at the moment it's looking like, according to the silver price, if you look at the 5 minute, they're managing to mark the price down there at this time. Okay, let's have a look at yesterday's action. The market was up in the futures, but as soon as we got towards the Tuesday high, the market was then slammed down to the DP level. The DP level is a very important level. The daily pivot is sort of the mid-range of the previous day, and you can see as the market was pushed through here and it came back off the lows, you've got your green bar there, and then the market interestingly enough just got into a sideways range sitting on the DP level. Again, that's how important these levels are. If you didn't have the DP in the chart, you would never know why that market was sitting and trading sideways like that. The MDI changes to green, and then we start to move to the upside. I'm going to fast forward through this. As you'll see that I'm drawn in an 89% retracement from this high to this low, and that's projected here. Again, you can see the market's just broken above the 200 MA, which is the black line, and the BRN here, the psychological level, the minor one, and the market is now sideways once again. So it needs new buying to break to the upside. There you see it goes to 89, it stops, and then the market trades sideways once more, and then eventually breaks and then moves up towards the high that the market made. This is actually an 89%. I was messing around with another screen on another computer, so I didn't mark this one up, but that's would be around 89% as well from that high. You can see, because if it hasn't breached the high to the left, then it's, you know, more or less in that area, unless I marked it up after. Who knows? No, we went and created a double top there, and then we're now, you see, once we've got through the 5-bar moving average here and we start to make these rising lows, notice how the 5-bar moving average becomes a measure of the market's momentum. The 20-bar is medium term, and then you've got a longer term as far as the 3 averages are concerned. So as long as the 5 is above the 20 is above the 200, you've got that momentum to the upside. You can see there where there was a bit of weakness here, which you'd expect because we had some selling. The market came back to the 20-bar moving average. Prices closed back above the 20 and the 5, and then start to move back to the upside, keeping that trend intact. And then again, you can see how prices move away from the 5-bar moving average, again keeping you long in the trade as the momentum's to the upside. Here you've got some selling pressure coming into the market at the R1 level, and that sort of price activity you can expect, some price action, to see some profit taking, and that's exactly what you see there. So the market then drifts back towards the 20-bar, closes back above the 5, and then again you've got an 89% or 78% from there projected back to there. Then you've got your potential sell signal there as the market pulls back, and watch this bar. Again, you can see how they bought back as soon as they hit 87%, retracement there, which was drawn from there to this high. So as soon as we got to 78, you can see them buying back in. The bar's narrower than the previous bar, and there is a greater volume. So that indicates that there is buying at this level, and the reason for leaving the trade. And then the market retests, and this is interesting because from here back to here is also an 89% retracement within that 78%, and then the market's free to move back to the upside, which it does. So I'm going to fast forward through the morning. You can see the market went really quiet, and then sort of just when the New York electronic opened, the prices were slammed down to the previous day's close, and then they started to bring the market back. I'm just going to again, you got the market closing, failing to close above the 20, closing back below the 5 bar, staying below the 5 bar, comes back above the 5 bar, and then closes back once more. Then the market starts to show some support at the close. There's a few increases in the volume here as well, spikes, as the market then turns around, closes back above the 5 bar. There's the shorts getting out of the trade as the market is brought back. We spoke about this a couple of days ago, and then the market starts to move back to the upside. The MDI turns green. The market's struggling with the 200 MA because it will become a resistance plus the high. In order to get through the high, you need to drive through from the previous day and the 200, and then prices do this. Now all of the averages are lined up. You've got the 5 above the 20, 5 above the 200 there, and then the 20. So the 20 needs to get above the 200 as well to have it fully lined up, as it were, and you'll see that happen in just a moment. And there again, now again, notice how the 5 bar moving average is a great indicator of momentum, staying above this level. The 20 bars moving with the 5, it's catching up with the 5. Again, we see a bit of selling there, but then it's brought back immediately. In the next bar, you've got the sell, red down, green back, and then to get through resistance, you need to see an increase in volume. You see this bit more selling at the R1. The averages all lined up. The market sideways, waiting for the Dow to open. The Dow opens, and what I'm doing here is having a look, see where we are in the daily charts. We get a bit of a struggle here. There's a bit of indecision, potential weakness, but the market again fails to close below the 5 bar moving average. Here we close below and then close back, get through the resistance, and then move to the upside. I'm going to wind this back because you'll see I just put an orange line on the chart. Let me just show you where that came from. When we looked at the daily chart for the DAX, I mentioned this 50% retracement at 15,429, and as that was a significant area, it's the R2. I thought I would just draw this in, bring it to your attention, and watch what happens. Again, see the momentum is really strong as the market leaves the 5 bar moving average, and then we get some potential weakness bang on the 429 area with an increase in volume. The big boys are taking some profits at this area. I know this because the market's trading sideways and sits on this level. We then get a spike through just to suck in a few traders just before they release the crude oil numbers. You see the selling there, and then the market's brought back below the R2 level. Then it just sits on it, and then we get a potential sell signal, but unfortunately this was right on the crude news. Notice also how the market was brought back as well at this psychological level. You can see the huge volume there stopping the down move, and then prices were brought back, as you can see, up to 62%, and then just trading sideways there before managing to get through, come back through the 15,429 up to 78%, and eventually to 89 there, where the market again finds resistance. Okay, that shall do it for this one. I've gone on far too long, but a lot of interesting price action in there yesterday. Very repeatable price action as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next.